Hey guys, good afternoon. It is December 17th on Monday in the afternoon Eastern Time, back from Mexico. Hopefully you can see I have a little bit of a tan that will last probably a few days. Feeling fresh, feeling ready for 2019, and wanted to get a little video out about a few tidbits that I think are very, very important. And I will be writing full reports on pretty much all of our positions, my thoughts on 2019. But the thing I wanted to get across today in terms of just talking to you guys is around this tax loss selling season and the opportunities that we have literally over the next 30 to 60 days to capitalize on an environment that is extremely likely to produce profitable trades or increases in value in our sectors of choice in mining and metals. And also to address, I've been looking at 2019 from every angle. And the one that I wanted to look at the brightest or the darkest, if you will, is a complete breakdown in the stock market and the economy and sort of a washout situation where things really break down after this 10-year bull run and maybe even seeing the early signs of a recession. What's that going to do to our mining stocks? What will that do to commodities? These are very important things to consider first in the macro sense. And although I believe that, general commodities are not going to be immune to a move lower, you also have to look at the prices of the securities behind these commodities. And one of the things that I'm seeing that is really interesting, instead of the environment that we had in 2008 and 9, whereas we had a really strong market for metals and mining for almost 7, 8 years at that point. And we saw really the sector sell off just as bad, essentially, although not as long, and it was a lot more brief for gold stocks. But, we were coming from a valuation level that was completely different than today. The sectors of gold and silver and then general commodities in terms of junior mining stocks and the producers is destroyed. It is absolutely, again, just like in late 2015, bombed out is the way that I would put it. And I looked at some of my big positions, the leverage positions I have, like the First Majestic, for example, which is it's my biggest silver producer position that I took a big loss on and just started to buy back Friday and today. But I looked at it and I said, do I even want to buy it back right now? Because if everything's going to fall off a cliff, then in the market, and that's sort of the way that I'm leaning, is that a breakdown in the market could occur. Do I even want to buy it back? And what I came up with when I looked at all the longer term charts of the producers in these commodities and precious metals is they're already so cheap. I mean, they're already trading at massive, massive lows. And therefore, I don't believe we have the downside that we had 10 years ago going into a meltdown. In addition to this, the Federal Reserve is meeting this week, and my sense is that we are going to get the hike that everybody's looking for, and we very well may get more of a formal approach of a pause well into 2019, which could really cause reversing of course in the dollar, in commodities, and in the stock market. There would be a relief rally of sorts in the S&P and in the market. That could last indefinitely. It's a very important week in that regard. And so I think that either way, whatever the way things go in the next, call it, couple of days, as we get the Fed's decision into Wednesday and the commentary, I believe the situation is set up very much for, at a minimum, a very, very positive January effect in the juniors. And what I mean by that is that regardless of whatever happens with the stock market and the producers in gold particularly, okay, And the reason I say this is that if you look at the performance of gold versus the S&P, since gold bottomed in August at 1167, gold is now up over 8% since those August lows. The S&P is down over 11% in that period of time since late September when it hit highs. Gold stocks are up 17% in GDX, closer to 20% in GDXJ. So that was since the low that we hit it was September 11th that we hit in the gold miners. So the gold miners, about a month after gold hit a low, they hit a low and have reversed as well and have outperformed gold and have way outperformed the S&P. So the gold stock's up almost 20%, S&P down over 10%. That's a 30% net difference in the performance of these two areas. So what does this all mean? Let's watch gold, baby, because gold is going to have a big influence on the rest of some of the commodity sectors and mining stocks. And regardless if we're breaking the lows today in the S&P and the Dow that were hit recently, which is not good technically, and we could certainly go lower. I think that the Fed could end up sort of saving this situation if we close up and don't close at a new low today on the Dow and the S&P, go into tomorrow and see sort of a flat day into Wednesday. We could see a relief rally, or if the Fed disappoints people and doesn't talk about a pausing and they see blue skies and are going to continue with the hikes, then we could certainly see a real flush in the stock market. But if we do, what's been happening in the last few months is gold is reacting as it should, which is a defense, flight to defense and a flight to safety. And so I am very interested in seeing what this week will bring. But I've got to tell you that in terms of an environment from December to January effect type of movement, the tax selling in a lot of the juniors and other stocks is pretty much done. One interesting tidbit on the TSXV, which has been bludgeoned this year, I believe down close to 40% in the TSXV, which is very heavily weighted towards commodity stocks and precious metals. Over the past 15 years, the TSXV has gained on average 12.4% within 60 days of December 22nd. So that basically means that between December 22nd and February 22nd or so, the TSXV has gained 12.4% on average over the past 15 years, okay? So today's December 17th. We're coming into what is the best time of the year for the TSXV, which is heavily skewed to metals and mining stocks. We've got metals and mining stocks that are bludgeoned essentially for the last 7 years, besides a relief rally that lasted about 6 to 7 months in early 2016. This has essentially been a continuation, a 7-year bad market for this sector. Sentiment is terrible. And I will tell you guys that, I get it. You get your accounts whacked. A lot of the big positions that we have, like First Vanadium's even getting hit now, which I will say I believe that we're getting close to support on. And, First Vanadium is not immune to the stock market and to the economy. If you're dealing with a metal that is broadly used in steel, which is very, very key in construction and economic strength or weakness, vanadium's going to have, there's going to be an impact there. And I think that if the stock market absolutely gets destroyed, the vanadium stocks are not going to have a very strong backdrop. So I think what happens with the Fed and going into next year is going to be a big deal for a company like a First Vanadium, a Largo Resources, even though we're in great shape and wanted vanadium to cool off. If you recall, I mentioned it, recently, where we were in the 30s per pound of vanadium, that it was getting too hot and would like to see it cool off back into the low to mid 20s, which is where we are today, around $24, $25 a pound. I think we're going to see support between 65 and 70 cents Canadian on First Vanadium, which could be touched tomorrow, maybe Wednesday. Largo is also down and looks to be testing its 200-day moving average tomorrow, maybe Wednesday. So these could coincide with lows in the market, or we'll see what happens with the Fed reaction. I mean, it could be explosive. It could be nothing too crazy, and back to consensus. But my point is that some of these different areas affect our overall sentiment. But I've got to tell you, I need to act and relay the opposite message to a degree of what I'm seeing from my subscribers, because as a whole, you're a great contrary indicator, as are people in general that are in the market. And sometimes that gets to extremes. And I would say that right now is in an extreme. And the extreme is, a great example is Miranda Gold. Most of you didn't even look at this thing, much less buy any, since I recommended it. I know it's a new pick and everybody's down, but this is the type of stupid, ridiculous opportunity that only shows up in these environments. And you simply have to own some. You simply have to buy it. If you're anywhere near the ballpark of my mind frame, I found the money and have bought 5 million shares of Miranda Gold in the last few weeks, which is going on close to $100,000 Canadian. And it's not like my liquidity is terrific when I'm getting hit all over the place. There's no endless supply of cash that I have sitting on the sidelines. But stuff like this, it's you're talking about a $1.34 million enterprise value on Miranda. There's hot dog stands that are worth more than that in New York City. And we have 700,000 ounces of gold in Colombia, 7 assets in Colombia, 2 of which are being moved forward by IAMGOLD and Newmont. You have the chairman of Triumph Gold, which has been one of the best performers this year, that's behind the deal and is behind the fact that after we close this financing, they're going to roll this back, clean it up. It's a restart. Everybody who was in Miranda before is just completely, basically wiped out. We're stepping in right now on a restart with a completely new future, a bright future, but with an asset base that's probably worth, at least in a bad market, $10 or $20 million. And we're buying it for $1 million. We have $500,000 allocation in the private placement at 20 cents, which is 2 cents essentially, with a full 5-year warrant at 40 cents. I'm going through the numbers now. We've got about 350 done, and it's crazy because I even offered this out to premium members. Usually elites would take something like this and oversubscribe it, like we saw with Gainey. But this has just gotten progressively worse in the market. And people, if you get deal fatigue and things like that, I get it. Again, there's a limit to all of what we can do. But I'm trying to tee up things that I think are must-dos at this time. And Miranda's just, it's a sign to me of how bad things are right now. And usually when things are this unresponsive from people, I'm not getting a lot of hate mail yet, which may be what's coming next. But certainly people are very, very, very reluctant to take any new positions on, to buy any stocks. Everybody's waiting. Even like companies that are trying, they want to, they haven't marketed their stock in forever. They're all waiting. Nobody's doing anything, And so for me, what I believe that this sets up is a very likely rally in January of about minimally 15 to 20% in all of our juniors. Companies like Timberline, Bravada, Southern Silver, all those stocks, I see a 20% or so plus rally. The 12% gain we see in the TSXV, I think will improve upon that in the precious metals area and see something to the order of 15 to 35% is what I'm expecting. But we're going to have some stocks that will double or triple next month. We saw it a couple of years ago going into 2016. And the thing that set off that big rally in gold, if you recall, is that the Fed had been raising rates into December of 2015 and then paused They paused until I believe it was September of 2016. All this pressure by Trump on the Fed, are they going to do something there? They just need to look at the economic data. And I think that the problem that they face that we all know about is this massive mountain of debt that we have, that the world has, that if you raise rates too far, too fast, the global economic structure could collapse. It's bad. I mean, it's unprecedented times 100, 1,000. I mean, in terms of the global debt and the way that this system was manipulated with low interest rates for so long to stimulate this recovery manipulated artificially. It's a problem, so they may very well need to just hit the pause button. And this could set the tone for a dollar reversal downward, a stock market rally, a major gold and commodities rally. We'll see, we'll see what they have to say. But now the Fed futures, the prediction market that has been very accurate, instead of the Fed plotting the way that the Fed is plotted and other analysts in terms of how many hikes they're going to have this year, next year, the Fed futures market is saying that after Wednesday, we're not going to see another hike until next September. And even that is only at about 50%. It's been very accurate the last couple of years. We'll see if it's accurate now. If it is accurate now, we could see a powerful rally in gold. We could see a powerful rally in markets in the year end here to get us a positive Santa Claus sort of a rally. I don't hope that the stock market falls apart and we get a recession or a depression. But if we do see that happen, which probably will happen at some point, right? You want to own gold. You definitely want to own gold. And gold is going to be a safe haven. And the gold stocks, with how far they've been beaten down, are bargains right now. And I would encourage you guys to take a sober look at your portfolio, look ahead, look at some of the valuations. If you could say to yourself, take yourself back to 2016, for example, and if you thought, okay, I could buy MUX again when it was trading at $4 or $5, going through the roof in the summer of 2016, and you could buy it again at $1.70, $1.80 US. New gold, I believe, is a must buy here because of the fact that regardless of what the market does or even what gold does, there's a turnaround element underpinning this. It's an execution situation by a proven operator that adds value to mining companies, who is just starting in that direction after the stock has been absolutely destroyed by 80% this year after problems at Rainy River. Now it's underway. It's just beginning to be underway. You've had massive institutional exits in that stock for tax loss selling purposes. This stock is going to go back up over $1 US in January. Mark my words, watch what happens. It's at 80 cents now. So, you're talking about a 25% trade, if you like. But that's just going to be the start of it. If they end up successfully turning New Gold around at all, and even in that direction, this will be at least a triple in 2019. And that has nothing to do with needing leverage in the gold price. A lot of these juniors, for example, the Bravadas, the Timberlines, we need a better gold environment and a gold mining environment for them to end up coming back to, good levels where we're happy, where we're excited. But a situation like a New Gold is that's going to add fuel to the fire, but this thing could triple just based on execution and a follow through on the plan that Renaud Adams has in place. So I believe that at this juncture today, you've got to own some Miranda. You guys, you haven't even bought as much as I have, as a complete list of just under 1,000 people or 750 people on the premium list. Come on. I mean, it's crazy. Just look at it. Don't even listen to me. Just go look at it yourself and you're going to buy it. It's a complete no-brainer. And if you believe that now is the time to be planting seeds with warrants and discounts to market for the next 5 years, where you could sock away these 5-year warrants. The people that plant seeds consistently, even if your pace isn't all that fast, if you continue on, look what happened to us in 16. We started to take that on, and a lot of us were doing deals. We did Bravada, Southern Silver, Timberline, others, and we were up, 5x, 8x, 7x, 6x, not even including the warrants. The warrants are going to end up at some point. They're going to end up making a lot of the elite members and some of the premium members that have been active with me with the placements. They're going to make us a fortune, okay? A fortune. And if you stop and you don't keep planting some seeds and putting some in place, you're going to miss incredible leverage at the time where these markets sustainably improve for the metals and mining sectors. Silver, I have got big bets in not only long-term call options in SLV that I've been placing for the last couple of months. I am levered up in First Majestic once again, Mag Silver, and Great Panther. Those three are big time targets for people that want to not just deal with the penny stocks, even though Great Panther is a penny stock. It's a New York Stock Exchange listed company doing a good amount of silver production and revenue. And these are bigger companies that either, like with Mag, they've got incredible resource at the development stage, First Majestic in production, Great Panther in production. Focus on those. Focus on McEwen. Focus on, if you want some big leverage for developed projects, as call options, International Tower Hill Mines, Northern Dynasty. These are the ones that are trading at 40, 50 cents US that, once gold breaks out above 1400 and starts to get its mojo back in a big way, where it finally breaks those 2016 highs, which could happen next year. It certainly could happen next year. When that happens, these stocks are going to be trading 10 times higher, okay, 5 to 10 times higher very shortly after that from these prices. And there's massive, massive, massive leverage. And if gold ends up going, as we believe here, 2,000, 2,500 bucks eventually, those are the type of stocks that have no cap, that could be crazy, crazy. I could have bought that. You're going to say to yourself, I could have bought International Tower Hill at 40 cents. I could have bought Northern Dynasty at 60 cents US. I could have bought McEwen Mining at $1.75. I could have bought New Gold at 80 cents US. This is exactly what people are going to be saying. And I'm not saying it's going to happen overnight. There's a lot of stuff going on in a macro way where I can't be. There's a lot of things that I'm just not 100% confident on. We need more information from the Fed. I have a lot of concerns around, obviously the global debt levels in a rising rate environment for all asset classes. But I know when there's real gut screaming value at times, and that's what I'm seeing right now. At some points, I have to ignore the overall picture, stop trying to predict the macro, and just focus in on some of these smaller companies that I know that at some point I'm going to make 5 or 10 times my money when things improve. I just have to be able to buy them, and I have to be able to wait and be patient. And that's really what I would encourage you guys to do. Very interesting that gold's up 8%, miners are up almost 20%, S&P's down 11% since August. TSXV over the last 15 years has been up over 12% within 60 days of December 22nd, which will be kicking in, call it this Friday is the 21st. And so all those things together, I believe, is leading up for, and just the subsiding of the tax selling. Because when you have no buying pressure and you have consistent selling, these stocks go down, these juniors can go down considerably. But let me ask you a question. What do you think would happen if I had 100 grand, which is nothing in the scheme of the stock market? If I had 100 grand to put into Bravada, which is 6 cents by 7 cents, and if I wanted to buy that by the end of the day tomorrow, what would happen to the stock? It would be 10, 12 cents. I mean, on 100 grand. So imagine when some money starts to flow back here, when the marijuana sector is finally done with its big multi-year run or levels off, there's a lot of money that's going to come back into this mining sector. There's none here now. We're scraping by, but those, in my experience, are really the best environments to be doing something. Just do something. Put something on the books. Pick your best couple of stocks, whether it's gold investment letter stuff, it's not, it doesn't matter. Buy GDXJ. Just make sure you're taking some action in an environment like this. Be prepared for it to get worse before it gets better. If that's the case, that's the case. I really don't think so. I think we are at a bottom right now. I think we are at the apex of tax selling season and an incredibly bad market for the miners. So that's my 2 cents today, guys. I hope it was a bit helpful. I'm going to be reaching out to some of you this week just to talk with you, elite members, if we haven't talked. If you haven't gotten back to me on like Miranda Gold, that placement, you guys should just do it. Just trust me and do it. Do something. If you normally do placements, but you've stopped, that's one that should be done. There's going to be some, I think, interesting stuff that comes out on Hilltop this week where there's still a placement open. Keep an eye on the stock. Might go to a nice premium here. There's a long-term warrant. We've got some very significant applications in the metals and mining space that I think are going to start to become evident there. But the big thing is to just focus on, even some of the producers, the Mucks of the world, the New Golds. You don't have to always do the penny stocks, although those are where the big leverages, the most leverage is there. But, if you're a wealthier investor and you just don't want to mess around trying to buy 10 grand worth of a penny stock, put it into something that's more liquid, like a New Gold, like a McEwen, like a First Majestic, Mag Silver, Great Panther. Silver is very interesting. If gold does well, silver as an investment versus just an industrial, which it has not participated at all in this recovery in the last decade, is going to do some interesting things as well. So that's that. I have a lot more information coming out in the next couple of weeks. I will be working through Christmas this year. I just got back from my holiday. I'm fresh. I plan to publish a lot of information and hopefully relay some things that you guys find of value. Thank you.